Hello, welcome to another edition of the Ashworth Wealth Weekly Market Update. This market update, I think, is going to provide a good example of some of the difficulties of doing weekly updates and of looking at what markets are doing on a week-to-week basis. The simple truth is that things fluctuate so quickly. There's so much information that comes out, and things just change. The first 2 quarters of this year were fairly strong quarters as we had to come back after the difficulties from last year. But as we can tell from this chart, this quarter has not been quite as friendly. Other than commodities and cash, we were down in pretty much all of the other market segments that we take a look at, the asset classes that we look at. Emerging markets were down, US fixed income down, US large cap down, developed markets, emerging markets, or excuse me, small cap, and then of course real estate, really difficult time. Now, with that being said, we're going to have up downs, we're going to have down times. So what we try and focus on is not necessarily what's happening week to week or month to month, but we're trying to look at this and say, how is this going to affect our portfolios in the long run? How is it going to affect our plans in the long run? And the truth is that when the markets go down, there are opportunities for us to rebalance portfolios. There's opportunities for us to take a look at underperforming assets and see if there's times that we can buy those or if there's times that we can divest ourselves. And that's something that we're doing on a regular basis. Right now, I think is just another example of the importance of diversification, of making sure that we are diversifying our asset classes as much as possible, that we have exposure to Europe, that we have exposure to emerging markets, and that we have exposure to large as well as small here at home. Now, we are going to have some quarters where the markets are down, just like this one, pretty much across the board. But that does provide opportunities that we're constantly looking at to make sure that we're making our portfolios for you as efficient as possible. So bottom line is that we're still dealing with some pretty significant economic headwinds. There is still hope out there for a soft landing, as we've talked about before, where the Fed has been raising interest rates so much over the past the past 18 months or so. But there's some definite economic challenges that are still out there. We're still, of course, hoping for the best, but we're preparing our portfolios to make sure that we can take advantage of both the times when they're up as well as when they're down, as we've seen over the last quarter, over the last few months. So once again, we're grateful for the opportunity that we have to work with each of you. We understand that there's good times, that there's difficult times, but we're building our portfolios and building your financial plans to make sure that we take advantage of those things over the long haul, not just what's happening week to week, month to month, quarter to quarter, but make sure that we're prepared for long-term investing. If you feel that there's anybody that would benefit from this message or any of the other messages that we send, please feel free to share it with anybody. And once again, we do appreciate being able to work with each and every one of you. Have a great rest of your week, and we'll look forward to putting out another message next week.